Okay, the Trump rally continues. Again, it was last weekend, but the weekend before that, I talked about a rally off of the 50-period moving averages with the election or with the Fed or with both. Had it with both. The rally continues. Again, we're likely headed towards those monthly trend lines on the S&P and the NASDAQ. Dow was up 0.69%, up over 300 points at 304 points higher. S&P was up 0.1% higher, up almost 6 points to close just above 6,000. Remember, I told you to be watching for that. And again, monthly trend line just a little bit higher. Probably reach it, may even overthrow it and go towards 6,100. But I am looking for the 6,000 area to tag that monthly trend line and then likely reverse off of it. We may overthrow it. If we do, then watch 6,100. Good chance we turn off of it. NASDAQ, again, flat like the S&P 500, up 0.60%. The Russell was up almost 1.5%. The VIX was up 0.2%, still hovering under 15. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please support the channel. Follow the link. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Please consider helping out. It would really be encouraging to hear from you, and I thank you for your consideration for that. The VIX had the gap lower with the results of the presidential election. Again, I talked about coming back to the 200 and below the band here, expecting that bounce off the 50-period moving average to go back and try to back test the broken trend lines. I talked about all that at the time. That gave us this gap lower. This gap's eventually going to get filled. We have the tightening of the bands right here. It's what we had before the volatility exploded back July sell-off. See something similar to that here in the not too distant future. But like I said, I believe the S&P is still going to go make a new all-time high. Talking about that trend line for a long time. Target level between 5750 and the 6,000 area. We already hit the low end of the targets. Now we're hitting the higher end of the target. Just directly underneath it, we're likely going to reach that level or maybe even overthrow it at 6,100. Again, I'll be watching to see if we begin to see signals recycle back up and volatility returns. We reach the monthly trend line this week. That is, we're within striking distance of it. We do, again, see volatility return. One of the problems is we've seen volatility drop back to the 200, but the 50 is still above the 200. So again, we're likely going to end up getting back above that 50. One of the whole problems with this rally is that the 50 is still above the 200 here on the VIX, suggesting that volatility will return. We're going to be looking for new all-time highs on the S&P 500. NASDAQ can go back up and fill the gap. We're now there, and now I'm looking for the topping process to finish, rounding my target levels. We're there in the upper end of that range. Again, going to be looking for the top to complete soon, eventually to get back above the 200 and the 50 here, and the 50 to remain above the 200 here on the VIX. And I've shown you over the weekend that when you get that 50 above the 200, again, that's when bad stuff starts happening on the S&P 500. We've had it above it, and we've had the sell-offs in July here, had the August sell-off here, and then we had VIX rose, the market sold off, and then we had spike as after we broke to a new high on the S&P, we formed the triangle and volatility increased. Same thing here. This was our sell-off to the recent 50-period moving average on the S&P 500. We had that big gap with the presidential election that flipped the momentum back to bullish with the bullish reversal of conditions with momentum here. The cloud with the bars and the oscillator turned back up and went positive, and again now forming that divergence with the momentum flipping back to bullish. We had that little bullish divergence on the 60-minute chart. Little buy signal showed up Tuesday, the day before the election. Again, momentum going positive, flipping back to bullish with the election results. No topping signals yet, so again, we're likely going to reach that monthly trend line and the weekly trend line that I'm showing you in this video, and I showed you over the weekend. It's possible we form a divergence surrounding the inflation data this week to complete a topping process. Just as I told you over here, the inflation data would likely give us a bottoming process, and I told you that when we got the jobs report and the sell-off. I told you the inflation data would form a bottom. It did. It sometimes forms tops, sometimes forms bottoms. Still think the S&P moves to a new all-time high. Saying it for months. NASDAQ goes back up to fill that gap. We overthrew the gap on NASDAQ, and NASDAQ's now trend lines testing them just under the monthly right near that, right at that weekly. May overthrow it, unless it diverges with the S&P 500, which I'll show you in this video. Momentum line turned back to bullish reversal of conditions. If we're going to see a turn, we got to see the momentum signals turn back to bearish if we turn and reverse off of the trend lines. But like I said, I still think we go to another new all-time high just underneath key resistance. Do we overthrow it or not? 6,100, or do we stall in the 6,000 range? Again, with the election, intraday signals went back. The election results there on Wednesday, last Wednesday, signals turned back to bullish. I told you about these bullish divergences intraday. They played out. Told you about back testing the broken trend lines. And we still may move above them. Reach the levels in the weekly and the monthly time frame. Signals back to bullish from the election last week. Post-election rally continues. Same thing here in the intraday time frame as well. Again, going to be watching intraday charts closely. If we continue, try to move closer towards the monthly trend line and the weekly upper channel line. S&P gets a little black candlestick, the form of a doji spinning top looking type of a candlestick. Again, it can move higher and hit the trend line or even overthrow it in the monthly time frame and on the weekly chart. Carving out this divergence on the MACD. Again, it's probably not done yet. We'll be watching similar divergence on the histogram. Told you I thought the S&P would likely pull back. It is doing that right now. The question right now is, does it get a small pullback, big pullback? We're going to get the CPI data, PPI inflation data this week. A possible scenario here, but again, we just may get a mild pullback and go higher. Sell-off continues tomorrow. You can try to rally with the CPI data come Wednesday. Do it right now, do it ahead of that. Then again, maybe a sell-off with the CPI. That is certainly possible if we rally ahead of it, top with it. Looking for a divergence here. And again, maybe this pullback is done, maybe it's not. Looking for clues. But again, I told you I thought a larger divergence would end up developing. Again, this kind of a Class B divergence developing where we had these two equal peaks and price went higher. I'm looking for a Class A divergence to likely develop, and maybe the pullback's done, maybe it's not. So again, I'm just looking for clues, looking for a rally into that monthly trend line, and again, maybe even overthrowing it. And also the weekly chart, overthrow it. We can go into 6,100. If we turn off of it, then again, you're looking at the low to the mid 6,000 area. At the very, very low 6,000 area right now, we could push a little bit higher, still remain in the low range, to the mid-range of 6,000. If we hit that trend line, if we overthrow it, then you're looking at 6,100 on the S&P 500. So again, I'm going to be watching. Do we end up forming a divergence here? Do we get a bigger pullback first, or is that all she wrote? We're back at the momentum cloud here in the 20-period moving average. So I'll be watching to see if that's all she wrote, or we get if we get a bigger pullback and then a bigger rally. 2-minute chart here. And I'll be looking for diversions because of, again, I talked about this divergence before the rally began. Remember that? Remember how NASDAQ got a higher low right there? We hit it at key support, and it was a 50-period moving average in the daily time frame. And I told you we were likely, because of that divergence and because of the 50-period acting as support in the daily time frame, that we would likely get a presidential election rally and possibly a Fed rally with it, or rally with the election and maybe a sell-off with the Fed. I told you those were the possibilities. We got the rally with the Fed and with the presidential election results. So again, told you to be watching for diversions. But this divergence played out very nicely. This divergence gave us a sideways correction in the form of a triangle. So did this one over here. I can't quite see it here, but we had a divergence there, and it gave us a triangle. This triangle broke down, but then it was a false breakdown. I told you that we could forming, we could break up. Well, it was a fake out back to the 50, back to horizontal support, and then the push back up after the breakdown of the triangle with the election. I talked about it in great length and detail over the weekend. Again, right below this black trend line going all the way back to 1929. The peak here, 1929, you connect it to the 2000 top. That's where we're at right now. Chance that forms a top here. Highly unlikely we're going to get above this trend line and be able to stay above it. You might overthrow it, but you're not going to be able to stay above it in all likelihood. Do clear it. Now, just tap it and turn off of it. We may overthrow it. and then reverse and get a topping tail. The month ends right underneath it, and that's why I say if we go over it a little bit, go to 6,100. But right here, it is at the 6,000 area. Target was between the red line, 5750, and 6,000, just over 6,000, which is where we're at right now. We're just underneath it. So here is the monthly chart up close. Here's the trend line. I talked about the mid 6,000 area. It looks like, just eyeballing it right around 6,040 maybe. We reached it. I talked about when we were at lower levels, I talked about the 6,020 to 40 area, just eyeballing it. It looks like it's right around that mid 6,000 area, under 6,050. So right around the 6,040 area, give or take. Again, just eyeballing it. We're going to hit that trend line. And if we get a bigger pullback and we turn back up, we can get a nice looking divergence with the CPI. If we start to rally it back up now, maybe it forms ahead of it, but a more mild pullback, as I've talked about with the 60-minute chart. But this is where I'm looking for prices to move. I think we'll reach it. If we overthrow this level, I'm looking at about 6,100 or so. We can get an overthrow of this level. Sometimes that happens. Looking for a possible topping tail this month, or the month ends, and a reversal off of this trend line. Nobody thinks that's possible. As we approach this trend line on the S&P 500, here in the monthly time frame, in the weekly time frame, then we have this trend line directly overhead. I talked about this in great length and detail over the weekend, just briefly showing you where we're at. Again, we're starting the week just slightly higher. I think we can hit this upper channel line, and if we hit that before the weekends, maybe with the CPI data or the PPI data Wednesday and Thursday, the market opens, we'll get those reports. We hit that monthly trend line as we're hitting this upper boundary. Again, I talked about getting a rally. We had sold off on a weekly chart, and I told you we were hitting the 50-day moving average in the daily time frame and horizontal support from the July peak. We're likely going to get a presidential rally or Fed rally and move back up to this trend line, which we did, and probably move to new highs if we back tested that first broken trend line, which we did, and we're going it now. But we're probably going to see this upper channel line. And again, you got the peaks over here, you got the low here, and again, it's likely that we're going to move up to the upper channel line, and we could do that before the week ends. If we do and start to reverse, we could start to sell off, or at least start a reversal ahead of NVIDIA earnings, should we turn off of this trend line after reaching it with the S&P 500. That could be a catalyst. AI is in a bubble. Jeff Bezos right now just announced again selling huge amounts of shares. Selling another, 16 million shares here. 6 million and then another 10 million shares. Nothing to see here. He's just funding his other projects. But for a reason. He's not a dumb man. He's a billionaire for a reason. He built Amazon from nothing. He is a smart man. He's selling. We've seen other billionaires into the rally. Bezos previously sold into the Amazon rally. But I digress. Again, we have the divergences. Again, I keep saying S&P is going to make new all-time highs. I still think it's going to make another new all-time high and move to this level. Don't think top is in yet. I think we will reach this upper channel line. And again, this is coming in same area where the monthly trend line is, long-term channel in the monthly time frame. The last peak on the RSI marks the October peak. Again, we're forming this little divergence in the most recent price action. We'll probably reach this level. Could see a topping tail off of that upper boundary. Could see some kind of reversal candlestick happen. We do attempt to reach it. Rally into resistance likely will form a top just before the recession hits. The recession is still going to happen. The market is celebrating President Trump's victory. The Wall Street likes President Trump's economic policies. Not going to stop the recession from happening. President Trump's policies will take time to be implemented. They may help shorten the recession, may ease the pain of the recession, but they will not stop it. Already had the recession signals triggered. If he can get us out of the recession, deregulation, extending the tax cuts, these other things he talked about, no tax on tips, no tax on Social Security, no tax on overtime. Some of these things help ease the pain or even shorten the recession. Still going to happen. Wall Street's celebrating Trump's victory, we're likely setting up a topping process. Now, again, this will probably take us into 2026. Do see good economic policy implemented, then again, start a new bull market at some point in 2026, late 2025. We're likely still going to witness a topping process here, a reversal, beginning of a bear market based on the weekly and the monthly charts. Turn off that long-term trend line on the S&P 500. A little bit further to 2020, you could see again the divergence in 2022 led to this sell-off of 27.5%. The 2020 sell-off 35%. This divergence will likely lead to a reversal and a top, terminate the bull market. The divergence here, the divergence will play out, but like I said, again, we could rally up to the trend line. Another trend line I'm watching is this trend line right here from the peaks earlier in the year, the March high and the July high. And again, if we push a little bit higher or even overthrow that level, but it's a trend line to be watching. And then right here, they intersect. If I include the shadow, the other one I didn't include the little shadows there, and it was a little tighter. This one, if I include the peaks, again, it's coming up into this trend line, and they intersect right directly overhead. So it could be, and again, here we have this Class B divergence where we had two equal peaks on the RSI. Now a Class A divergence is developing here. We're likely getting a divergence in this most recent price action from the October high. So this is the area, and that would take us again directly into that trend line in the monthly time frame. You know, do start to see the diversions play out. Is what you want to see happen is you want to see the RSI turn back below the 50 level, and then you want to see price, if it goes higher and turns, we have a rising wedge now here. If it turns, you want to see a drop below the 20-week moving average. You'll get a 2050 sell signal there in the weekly time frame. That over here, we dropped below the 20-week moving average. We moved into negative region shortly thereafter, tagged it, bounced off of it there, and then for a 50-50 sell signal, that would be a 2050, the RSI below 50 and price below the 20, and then if we get a bigger sell-off, the 50 is the green line, 50 level on the RSI. And when we had the 50-50 signal here, we had dropped below the 50 here with this bar, and we dropped at that time simultaneously below the 50 level on the RSI. The 50-50 signal that marked the bottom over here. And again, notice the RSI remained in negative territory through the decline. You'll likely see something like that happen. The RSI can get back above D level in counter trends. It doesn't always do it, but it can. But if we reverse the RSI and the drop below the 20 and eventually the drop below the 50, will confirm a 2050 sell signal and a 50-50 sell signal. These divergences are to play out. Something to pay attention to in the weekly time frame. Two trend lines I'm watching now. This trend line right here, the red one here from these previous peaks intersecting with this level right here. That could take us, again, directly overhead. They intersect directly overhead, and that's where that trend line in the monthly time frame is coming in. Again, here's SPY, just real fast on the daily chart. We're above that upper Bollinger Band still. Going to be watching for close back below it. We'll likely still reach those trend lines in the weekly and the monthly time frame. Going to be watching for diversions to complete, as I said, on the MACD here in the daily time frame. But SPY and the S&P 500 cash, again, bounced off the 50. I talked about this key level of support ahead of the presidential election. And remember, we formed the bullish divergence here on the 60-minute chart that I've talked about in this video. Today, the S&P, we gapped higher. Futures opened higher. We gapped higher. Went a little bit higher than previously the prior week. S&P went down to 6,017. Again, we could still go a little bit higher to that mid 6,000 area or even overthrow it and go to 6,100. But we gapped, pulled back, got a lower high, and then came back to the 200. The 50's coming down. So if we get a bigger sell-off in the 60-minute chart, you need to drop below the 200 and have the 50 drop below the 200 here, the green line. Going to get a bigger sell-off on the 60-minute chart to form a larger divergence. If we rally immediately, then we just get this little sell-off, and we get that divergence on the 60-minute chart immediately for a triple negative divergence to form. So if we drop lower, then again, get the rally with the CPI, PPI, one or the other. Sometimes you get an up day on one and a down day on the other. The CPI is expected to come in at 0.2% on Wednesday on a month over month. Expected to come in at 0.3% on a month over month with the core. The headline year over year is supposed to be 2.5. It's supposed to be hotter than the 2.4 previously made. The CPI, core CPI, is supposed to be 3.3 at the same level as the previous reading. So we'll be watching all of that. Headline number is supposed to come in hotter. The core number is supposed to come in the same on those year over year numbers. Thursday, we'll get the producer price index, which is wholesale inflation. This could be a catalyst that moves the market. In the market session, Jerome Powell will be speaking the same day that we get the PPI data, inflation data on Thursday. So that's something to pay attention to, 3 p.m. Eastern time. Friday, we'll get retail sales. So got a lot of economic data this week. Next week, NVIDIA earnings, the 20th. So the inflation data, Wednesday, Thursday, and then Powell speaking during the market session on Thursday. Talk to you about the triangle right here. I told you we can have an upward resolution and still go up to the trend lines I talked about in the weekly time frame. I told you, but triangles can break either direction. It ended up breaking down, but it came back to support. It was a fake out move, and then we still got the move up to the trend line in the weekly time frame that I was talking about and overthrew it, moving to that other trend line, blue one that I talked about in the weekly time frame. Again, likely going towards that monthly trend line. Talked about over here that if we didn't move into negative territory, we could get a breakout and upward resolution. We ended up moving into negative territory on the awesome oscillator, but we bounced off the 50 period and it reverted right back into positive territory. I told you to be watching for divergence here. We're still getting it. We just went briefly negative with this fake out move down to the 50 period. I talked about the bullish divergence that's set up there at the 50 period on the 60-minute chart above this horizontal support. Still think we got a good shot at going a little bit higher, but then I think we will turn. We could pull back a little bit. Larger divergence sets up on the 60-minute chart that could set up over this week if we get a bigger sell-off and then a bigger rebound. I'm going to see how it unfolds, but I'm going to be looking for red bars to eventually show up here. They may show up before the weekends. We may complete that divergence on the 60-minute chart. But again, completing a larger divergence here in the daily time frame and on the MACD as I've been talking about. So we got the rally I warned you about with the triangle, and I told you there was not enough evidence to say that that was a top. We were likely going to bounce off key support, which we've now done. So we still got the rally, just got to fake out first with that triangle, breaking down and then getting back above the apex of the triangle. So if this divergence completes, the divergence on the 60-minute chart completes, again, it's possible we see the topping process come to a conclusion, maybe as soon as this week. If we hit the trend lines I'm talking about in the weekly and the monthly time frame and then begin a reversal off of them, we'll be watching this closely. But I want to say we got that red bar. And then last week, 2 weeks ago, we got the red bar. Last week, we ended up getting the big rally and overthrowing the trend line. The bar flipped back to green, and they're back to green right now. I'll be looking for the next red bar. You'll have the divergence on the awesome oscillator, just like on the MACD here in the weekly time frame. I keep saying the S&P is going to move to new all-time highs. It's likely not done. Probably going to move to that mid 6,000 area. We got to close above 6,000 now. We had an intraday push above it on Friday. Let's see that trend line tested and maybe overthrow it and move towards 6,100. So again, going to be watching for the next red bar here. Turned back to green last week again with the presidential election results, and the market wanted to go towards that trend line in the monthly time frame, saying it's not done yet. Sometimes you get the red bars and you still rally. Here they started off red and it flipped back to green. But at the beginning, presidential election results, it was red. Same thing with the NASDAQ, and again, it's forming a divergence now, I told you. But the July peak was in because we're hitting major trend lines of resistance in the weekly, monthly time frame. Told you if we go above that level, you could slam into the trend lines again and end up forming a divergence and go just above this area. Well, those trend lines, that's why I thought we had a top. I was wrong about that. Went back up when we hit the trend line underneath it there in the monthly time frame on NASDAQ. NASDAQ weekly chart here. Bars turning back to green last week. Divergences are still present on the awesome oscillator and the MACD. We had NASDAQ, well, S&P got that lower high. NASDAQ had moved up to a higher high. It did form a divergence. S&P did not. So again, S&P went negative with the awesome oscillator, turned back up. NASDAQ's now turning back up and getting a triple divergence on the awesome oscillator, and the divergence still present there on the MACD. Now, NASDAQ has this really nice looking channel, pandemic low. Again, we're just right there hovering at this level. A negative divergence is forming. We've gone slightly higher. If the NASDAQ can take out the July peak, we would go up and we would hit the trend lines again. Now, this trend line includes the shadow here and excludes it here. We may overthrow this level, but I'm looking for a reversal in this neighborhood, and then for the NASDAQ to begin to turn down and take out this trend line. Could that be surrounding NVIDIA earnings? We peak and start a reversal? Possibly. NASDAQ just directly under that monthly trend line, just like the S&P 500. Now, so you can see that the divergence on NASDAQ a little bit better. We did have a little divergence that has given us this mild pullback so far. Again, it could evolve into a larger divergence either immediately, where we turn back up and hit the trend line or overthrow it, move towards the trend line in the monthly time frame, or again, a bigger pullback and then coming back up into this area if we get a bigger pullback and then rally with the CPI. But we could form a rally surrounding the CPI data ahead of the CPI or with the CPI if we get a sell-off on Tuesday. We'll be watching. Potentially a divergence could develop here or confirmation of a lower high on NASDAQ. But like I said, they could diverge from one another. I'll be watching to see if we get a divergence that looks something like the peak over here at the July peak on the 60-minute chart of NASDAQ. NVIDIA is so off today, and that was a drag on the NASDAQ. It ended down 10 points. NASDAQ composite was pretty much flat, and here we were down 10 points, pretty much flat. We could form a divergence, or we could get a confirmation of a lower high. Remember, at turning points, sometimes the NASDAQ and the S&P diverge. They did that back at the July peak. They did that back at the January 2022 high. Sometimes they diverge from one another. So something to pay attention to. But again, I talked about right here at the bottom, NASDAQ got a higher low. S&P got a lower low. They diverged at this low, and I talked about that before the election rally took place. NASDAQ still may go higher and get a divergence maybe that looks something like this. If we get a bigger sell-off and then come back up with the CPI, it's still possible that they diverge, the S&P and NASDAQ diverge from one another. Something we're paying attention to. On these 60-minute charts, another thing to pay attention to is possible head and shoulder patterns could be forming. Still too early to tell if it's going to play out or not. We reverse off of these resistance levels, it very well could. NASDAQ had sold off earlier. It has a possible hanging man candlestick on it. The S&P got the candle of indecision, got a possible hanging man. So I'm telling you, again, sometimes they diverge from one another. We are right at this trend line right here from these highs, and you have an expanded rising wedge on the NASDAQ 100 now. So again, for clues, still just slightly underneath that trend line in the monthly time frame, and just seeing that weekly one, and we might overthrow the weekly, but you've got this rising wedge here. So again, we'll be watching that. The NASDAQ daily chart here. And, rising wedge patterns get overthrows. And again, we could turn back down. We could come up and hit the trend line again if we go higher, or we can even overthrow it a little bit. Again, common for a rising wedge to get an overthrow move. NASDAQ tops out before the S&P 500, then again they can get a divergence like they did down here at the 50 period moving average where NASDAQ got a higher low, or over here where NASDAQ diverged with the S&P in July and it got a lower high, and S&P went to a new high a few days later after the July peak. NASDAQ, something we're paying attention to.